Based on the historical data and forecast, Bitcoin has shown considerable volatility. The RSI values fluctuate between 44.3 and 63.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands consistently show the price trading within a range, with the recent trend suggesting a potential move towards the lower band. The forecast data for the next week projects a downward trend, with prices decreasing from $104,200 to $101,500. Considering these factors, I recommend a short-term short position strategy. The entry price for this strategy will be $104,200, coinciding with the beginning of the forecast period and the initial downward trend. The stop-loss price will be set at $106,700, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $101,500, aligning with the lowest forecast price for the week. This strategy combines the downward trend indicated by the forecast, the RSI approaching oversold territory, and the Bollinger Band suggesting a move towards the lower band, aiming for a high return within a short time frame. Based on the historical data and forecast, Ethereum has shown volatility with a recent downtrend. The support price remains consistently at $1,800, while the resistance fluctuates around $2,470. The RSI indicates periods of both overbought and oversold conditions, with the most recent readings trending towards oversold. Considering the forecast for the next week, which predicts a continued downward trend, I propose a short selling strategy. We will initiate a short position at $2,480, placing a stop-loss order at $2,520 to limit potential losses if the price reverses. Our target price for this short position is $2,350, aiming to capitalize on the anticipated downward momentum. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential shorting opportunity. Conversely, when the price touches the lower band, it suggests a potential buying opportunity. Given the forecast and recent RSI readings, we will prioritize the short selling strategy. If the price falls below $2,350, we will consider covering the short position and re-evaluating the market conditions. This portfolio combines the RSI and Bollinger Band strategies to maximize returns while managing risk effectively. Based on the historical data and forecast, XRP shows a slight downward trend. The support price consistently remains at $2.02, while the resistance fluctuates around $2.16. The RSI values fluctuate between 41.9 and 54.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within a range, with the lower band around 2.07 and the upper band around 2.45. Considering the forecast data, which predicts a continued decline to $2.02, I propose a contrarian strategy focusing on short-term bounces near the support level. My strategy is to enter a long position when the RSI falls below 30 near the 2.02 support level. Specifically, if the RSI reaches 29.5, enter a long position at $2.03. Set a stop-loss at $2.01 to limit potential losses. Acknowledge the potential for a bounce, set a target price at $2.10. If the price breaks through the 2.16 resistance, consider exiting the position and re-evaluating the trend. This strategy combines support and resistance levels with RSI signals to capitalize on short-term reversals while mitigating downside risk. Based on the historical data and forecast, BNB demonstrates a slightly downward trend. The price has been fluctuating within a range, with a support level at $599 and a resistance level at $655. The RSI consistently remains below 60, indicating that the asset is not currently overbought. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering this, I propose a moderately bullish strategy. We will enter a long position at $637, placing a stop-loss at $632 to protect against a further decline. The initial target price will be $648, aiming to capture a short-term upward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, signaling an oversold condition, we will enter a long position at the prevailing price. Conversely, if the price touches the lower Bollinger Band, it also signals a potential buying opportunity. In either scenario, the stop loss will be set just below the lower Bollinger Band, around $632. If the price reaches $648, we will take partial profits and adjust the stop loss to break even. If the price continues to rise and breaks above the resistance level of $655, we will set a new target price at $665. This combined strategy allows for dynamic adjustments based on technical indicators and price action, maximizing potential returns while managing risk. Based on the historical data and forecast, Solana exhibits a downtrend. The price has been consistently declining from June 7, 2025, to June 20, 2025, and the forecast for June 21, 2025, to June 27, 2025, indicates a continuation of this downward movement. The RSI consistently remains below 50, with readings frequently dipping below 40, suggesting an oversold condition. Considering the support price of $135 and the forecast price of $128 on June 27, 2025, a short position is recommended. The entry price should be $141, with a stop loss placed at $147, just above the recent high of $146. The target price should be $132, aligning with the forecast price on June 23, 2025. To refine this strategy, we can incorporate the Bollinger Bands. The price is consistently trading below the middle band, reinforcing the downtrend. The bottom band provides a potential support level. Given the oversold RSI and the downward trend confirmed by the Bollinger Bands, the short position is justified. The strategy combines the RSI indicator for identifying oversold conditions, the Bollinger Bands for trend confirmation, and the forecast data for price prediction. This integrated approach aims to maximize profit potential while minimizing risk by setting a clear stop loss and target price. Based on the historical data and forecast, TRON shows a slightly downward trend with periods of consolidation. The RSI consistently fluctuates between 47 and 67, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, with the recent price nearing the lower band. Considering the forecast prices are slightly lower than the recent close, a conservative strategy is warranted. I recommend a long position entry at $0.273, coinciding with the center of the Bollinger Bands and a recent price point. A stop loss should be placed just below the support level at $0.268 to mitigate potential losses if the price breaks down. The target price for this trade is set at $0.28, aiming for a modest profit within the recent resistance range. This target is determined by the upper Bollinger Band. The RSI suggests the asset is not overbought, allowing for a potential upward movement. The strategy combines technical indicators to identify a low-risk entry point with a clear exit strategy. This position is designed to capture a short-term upward movement while limiting downside risk with a well-defined stop loss. The portfolio will consist of 50% long TRON and 50% cash. Based on the historical data and forecast, Dogecoin shows a downward trend. The price has been consistently declining from 0.185 to 0.147 over the past 2 weeks, and the forecast suggests further decline. The RSI consistently remains below 50, indicating a weak upward momentum. Considering the support price of 0.155 and the declining trend, I recommend a short position. The entry price will be $0.162. The stop loss will be set slightly above the upper Bollinger Band at $0.164 to protect against potential short-term reversals. The target price is set at the support level of $0.155. To maximize returns, I suggest a combined strategy utilizing RSI and Bollinger Bands. We will initiate a short position at $0.162. If the price breaks above the upper Bollinger Band of $0.164, we will cut our losses and exit the position. If the price reaches the support level of $0.155, we will close the position and secure profits. This strategy aims to capitalize on the current downward trend while mitigating risk through strategic stop-loss placement. The RSI indicates that the asset is not oversold, so we should be cautious. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The price has been consistently declining from June 7, 2025, to June 20, 2025, and the forecast for June 21, 2025, to June 27, 2025, projects further downside movement. The RSI consistently remained below 50, with values dipping below 30, indicating oversold conditions. However, given the continued downtrend, these oversold bounces have not resulted in significant upward price action. The Bollinger Bands show the price consistently trading near the lower band, further supporting the bearish sentiment. I propose a short selling strategy with an entry price of $0.587. A stop loss should be placed just above the upper Bollinger Band at $0.600 to protect against unexpected upward movements. A target price of $0.525, aligning with the forecast for June 24, 2025, provides a reasonable profit margin. To refine the strategy, we can incorporate the RSI and Bollinger Bands. When the RSI dips below 30, it signals an oversold condition, but in this case, it's coinciding with a broader downtrend. Therefore, instead of buying on the oversold bounce, we will maintain the short position. The Bollinger Bands indicate that the price is approaching the lower band, suggesting a potential for a short-term bounce. However, given the overall trend, this bounce is likely to be temporary. Therefore, I recommend holding the short position with a tight stop loss at $0.600 and a target price of $0.525. This approach balances risk management with the potential for profit in a declining market. Based on the historical data and forecast, Sui demonstrates a downtrend, particularly evident in the recent forecast prices consistently decreasing from $2.77 to $2.51. The RSI consistently hovers below 50, indicating a bearish sentiment, and has recently fallen below 35, suggesting an oversold condition. The Bollinger Bands are also widening, indicating increased volatility and potentially further price declines. We will implement a short selling strategy targeting a profit from this downward momentum. Our strategy involves entering a short position at $2.77 on June 21, 2025, when the forecast price begins. Given the strong downtrend and oversold conditions, we will place a stop-loss order at $2.83, just above the recent support level and the upper Bollinger Band to protect against a potential false breakout. The target price will be $2.51, aligning with the final forecast price for the week. This strategy leverages the predicted decline, utilizing the RSI and Bollinger Bands to confirm the bearish outlook and manage risk effectively. Based on the historical data and forecast, Bitcoin Cash exhibits a strong upward trend. The price has consistently tested and broken through resistance levels, culminating in a recent high of $497. The forecast for the next week projects continued upward momentum, reaching $502. The RSI has generally remained above 50, indicating bullish sentiment, and has recently approached the overbought level of 80, suggesting a potential pullback is possible but not imminent. Considering the Bollinger Bands, the price is currently near the upper band, indicating a potential for a short-term correction. Therefore, I recommend a long position with an entry price of $474, a stop-loss placed just below the lower Bollinger Band at $381, and a target price of $502, aligning with the forecast high. To optimize this strategy, I propose a portfolio combining the RSI, Bollinger Bands, and trend analysis. Initially, enter a long position at $474. If the RSI dips below 30, indicating an oversold condition, consider adding to the position. Set a stop loss at $381 to protect against unexpected downturns. As the price approaches $497, take partial profits while maintaining a portion of the position to capitalize on further potential gains. Finally, if the price reaches $502, close the remaining position, securing a substantial profit. This blended approach leverages multiple technical indicators to mitigate risk and maximize potential returns. Based on the historical data and forecast, official Trump exhibits a downtrend. The price has been consistently approaching the support level of $7.56, and the RSI indicates oversold conditions, fluctuating between 32.2 and 39.7. The forecast for the next week projects a further decline, with prices ranging from $9.25 to $8.54. Considering the RSI and Bollinger Bands, I recommend a short position strategy. We will enter a short position at $9.25, placing a stop-loss order at $9.41, just above the bottom of the Bollinger Bands to mitigate potential losses if the price rebounds. The target price for this trade is $8.54, aligning with the lowest forecast price for the week, offering a substantial return. To optimize our portfolio, I suggest a weighted average of these strategies. Given the strong downtrend and oversold conditions, 60% of the portfolio will be allocated to the short position strategy described above. The remaining 40% will be held in cash, allowing us to capitalize on potential upward price movements or enter a long position if the trend reverses. This balanced approach combines the potential for high returns with a degree of risk mitigation, reflecting a prudent investment strategy suitable for the current market conditions. Based on the historical data and forecast, PancakeSwap shows a downtrend with price fluctuations. The RSI consistently stays below 80, indicating no overbought conditions, and recently dipped below 45, suggesting a potential oversold condition. The Bollinger Bands have been narrowing, indicating decreasing volatility. The forecast for the next week projects a continued downward trajectory, with prices ranging from $2.23 to $2.13. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. My strategy is to enter a long position when the RSI reaches below 40, anticipating a short-term bounce. Specifically, enter a long position at $2.17. Place a stop-loss order at $2.11, just below the lower Bollinger Band, to limit potential losses. Set a target price at $2.23, aligning with the initial forecast price and a reasonable profit margin. If the price continues to fall and hits the stop-loss, exit the position. If the price reaches the target, secure the profit and consider re-evaluating the market conditions for further opportunities. This approach balances risk and reward, capitalizing on short-term market inefficiencies while protecting against significant losses. Based on the historical data and forecast, KAITO exhibits a downtrend with periods of consolidation. The RSI consistently remains below 50, often dipping into oversold territory below 40, suggesting a bearish sentiment. The Bollinger Bands indicate periods of high volatility, with the price frequently touching the lower band. Considering the forecast for the next week, the price is expected to continue its downward trajectory, reaching as low as $1.37. Therefore, I recommend a short selling strategy. My recommended strategy is to initiate a short position when the price reaches $1.45. Given the current oversold conditions and the forecast, a stop-loss should be placed at $1.46 to limit potential losses if the price unexpectedly reverses. The initial target price is set at $1.37, aligning with the forecast low. However, considering the support price of $0.799, a secondary target price can be set at $1.3 for a more substantial profit. This strategy combines technical indicators with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB demonstrates a slightly downward trend. The price has been fluctuating within a range, with a support level at $599 and a resistance level at $655. The RSI consistently remains below 60, indicating that the asset is not currently overbought. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering this, I propose a moderately bullish strategy. We will enter a long position at $637, placing a stop-loss at $632 to protect against a further decline. The initial target price will be $648, aiming to capture a short-term upward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, signaling an oversold condition, we will enter a long position at the prevailing price. Conversely, if the price touches the lower Bollinger Band, it also signals a potential buying opportunity. In either scenario, the stop loss will be set just below the lower Bollinger Band, around $632. If the price reaches $648, we will take partial profits and adjust the stop loss to break even. If the price continues to rise and breaks above the resistance level of $655, we will set a new target price at $665. This combined strategy allows for dynamic adjustments based on technical indicators and price action, maximizing potential returns while managing risk. Based on the historical data and forecast, Algorand demonstrates a downtrend, particularly evident in the recent forecast period. The price is approaching the support level of $0.155. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, and nearing the oversold level of 20. The Bollinger Bands are contracting, suggesting decreasing volatility and a potential breakout. We will implement a contrarian strategy, anticipating a bounce from the support level. We will enter a long position at $0.167, placing a stop-loss order at $0.154 to limit potential losses. Our target price will be $0.176, aligning with the recent resistance level. To maximize returns, we will combine this strategy with Bollinger Bands analysis. If the price touches the lower band of $0.161, it signals an oversold condition, reinforcing our long entry at $0.167. If the price breaks below $0.154, we will immediately exit the position. If the price reaches $0.176, we will take partial profits and move the stop loss to break even to protect gains. This combined approach leverages both RSI and Bollinger Band signals for enhanced risk management and profit optimization, aiming for a high return investment in this potentially undervalued asset. Based on the historical data and forecast, PAX Gold shows a slight upward trend with price fluctuations. The RSI consistently stays above 50, indicating a neutral to slightly bullish momentum. The Bollinger Bands show that the price has been fluctuating within the bands, with recent price action approaching the upper band. Considering the forecast of $3,410 for the next week, I recommend a long position strategy. We will enter a long position when the RSI dips below 50 and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $3,290. The stop loss will be set at $3,240, just below the lower Bollinger Band, to mitigate potential losses if the price reverses. The initial target price will be $3,410, aligning with the forecasted price. To refine this strategy, we can implement a dynamic target price based on the RSI. If the price reaches $3,410 and the RSI exceeds 80, indicating an overbought condition, we will adjust the target price to $3,480. This allows us to capture additional gains if the upward momentum continues. Conversely, if the price approaches the resistance level of $3,470 and the RSI reaches 80, we will consider taking partial profits and moving the stop loss to break even to protect gains. This combined approach, incorporating RSI, Bollinger Bands, and forecasted data, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Axelar has shown volatility with a recent upward trend. The RSI indicates that the asset is currently within a neutral range, but approached overbought territory on June 13, 2025. The Bollinger Bands suggest periods of consolidation and expansion, indicating potential for price fluctuations. Given this, I propose a strategy that combines RSI and Bollinger Bands to capitalize on short-term movements. We will implement a long position when the price touches the lower Bollinger Band and the RSI is below 30, indicating an oversold condition. Specifically, on June 27, 2025, with a forecast price of $0.368, the price is near the lower Bollinger Band and RSI is below 30. The entry price will be $0.368 plus 0.01 is equal to $0.378. The stop loss will be set just below the lower Bollinger Band at $0.36. The target price will be set at the resistance level of $0.389 plus 0.01 is equal to $0.399. This strategy aims to capture a quick profit from the anticipated bounce off the oversold level and the support level. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Kava has been experiencing a downtrend, with the price consistently approaching the support level of $0.405. The RSI indicates that the asset is currently in the oversold territory, fluctuating between 41.7 and 57.7. The Bollinger Bands show that the price is nearing the lower band, suggesting potential for a short-term bounce. Considering these factors, I recommend a contrarian strategy focusing on a potential rebound. Our entry price will be $0.403, coinciding with the forecast price on June 26, 2025. We will set a stop loss at $0.398, just below the forecast price for June 27, 2025, to limit potential losses if the downtrend continues. Our target price will be $0.428, aligning with the center of the Bollinger Bands, aiming to capitalize on a short-term recovery. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 50, indicating a shift from oversold conditions, we'll consider tightening the stop loss to $0.407. Conversely, if the price reaches the resistance level of $0.456, we will take profit and exit the position. This combined strategy, blending Bollinger Bands and RSI, provides a balanced approach to manage risk and maximize potential returns. The portfolio will be 60% short position and 40% cash. This approach allows us to benefit from a potential upward movement while protecting against further downside risk. Based on the historical data and forecast, Kaia demonstrates an upward trend. The price has consistently moved above the support price of $0.119 and approached the resistance price of $0.212. The RSI values have generally been increasing, with peaks above 70, indicating overbought conditions, but also suggesting continued buying pressure. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering the forecast prices, which predict an increase to $0.222, I recommend a long position strategy. The entry price should be $0.18 on June 21, 2025, coinciding with the first forecast data point. The stop-loss price should be set at $0.168, just below the lower Bollinger Band on June 20, 2025, to limit potential losses if the price reverses. The target price should be $0.222, aligning with the final forecast price, offering a substantial profit potential. This strategy combines the upward trend, positive forecast, and technical indicators to maximize potential returns while managing risk. This position is expected to yield a high return. Based on the historical data and forecast, SEI has shown a volatile trend with periods of both upward and downward movement. The RSI indicates that the asset has been fluctuating between oversold and overbought conditions. Currently, the RSI is trending upwards, suggesting a potential shift towards a bullish momentum. Considering the support price of $0.193 and the forecast prices, I propose a long position strategy. The entry price will be $0.187, with a stop-loss set at $0.176 to mitigate potential losses. The target price will be $0.202, aiming to capitalize on the anticipated upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band of $0.176, it signals a potential buying opportunity, aligning with the RSI's oversold condition. Conversely, when the price approaches the upper band of $0.211, it suggests taking profits or tightening stop-loss orders. Combining these indicators, I recommend entering a long position at $0.187, setting a stop-loss at $0.176, and targeting a profit at $0.202. This approach balances the RSI and Bollinger Band signals for a higher probability of success, managing risk while aiming for substantial returns.